Welcome to our YouTube channel where we provide valuable information about accounting services for real estate investors in the U.S. The objective of this video is to provide a comprehensive guide on the processes that a CPA or certified public accountant must fulfill to meet the needs of real estate investors. We would like to highlight the importance of having a CPA specialized in real estate investments to ensure regulatory compliance and maximize tax benefits. Hello, Fulton. Thank you for being here. We would like to start a Q&A with you if that is possible.
Yes, thank you, Rosie.
Great. So first question is, what is a CPA and why is it important for real estate investors?
A CPA is the tax expert, a tax and accounting expert that is going to organize your transactions into financial statements and provide you with guidance for the income and expenses of your properties. Reflected on the financial statement, they are what are the level of the income or the level of the net profit for each of the properties, and also is going to help you to reduce your tax bill by applying all the possible and legal deductions for you to pay the minimum amount, the legal minimum amount of taxes.
Great. What are the key processes that a CPA must fulfill for real estate investors in the U.S.?
The first one will be the knowledge of all the tax rules regarding real estate. There are activities in real estate that are long-term rental, for example. There are short-term rental, and for one and for the other, there are advantages that the CPA will provide you guidance with the objective of applying the maximum amount of expenses like depreciation, the amounts of expenses that you have when you do the improvements, how they are depreciated, this coming from the organization of all the accounting. So all these expenses and all these deductions are taken into consideration for your benefit. So the first consideration is the only way to take all this deduction is the knowledge of the tax rules. So the first rule is the knowledge of the tax rule with the objective of reducing your tax bill. The other one will be the consulting side. Many times we receive clients, phone calls and messages where they need information right away. And as we offer our clients, we offer this type of advice. We have clients who called us up. We have clients that not only they call us up, but they also bring their partners they are not our clients, bring their partners, and we do a 3-way or 4-way call. And then the advantage of that is that you get the answers at the moment that you need. This is when you become our client. We give you the ability for you to have the answers to your questions, satisfying your need for information at the moment that you have them. Not 24 hours later, not a week later. You always have access to a CPA that is an expert in real estate. So those are the basics for a CPA that is serving the industry of real estate to satisfy the needs of their clients.
Thank you for that explanation. Next question is, how can a CPA assist in structuring real estate investments?
The journey starts with the selection of the entity type. Many times there's this belief that because you have a business, an active business that is separate from real estate, you can use an LLC for an active business. No, we always advise our clients to choose very carefully the type of entity. For LLC, any type of real estate investment, long-term investment or short-term investment in real estate, except for flipping. When you buy a property, you improve it and then you sell it. That's called flipping. Except for flipping, limited liability companies are the entity of choosing. For anything else, is an S corporation for U.S. citizens. So S corporations are only for U.S. citizens. If you have a rental activity, long-term or short-term, it's a limited liability company, that's for sure. But the limited liability company needs at least to have two individuals within the company to use or to benefit from the limited liability responsibility that this type of structure provides. For any non-real estate business, it's not a good idea to put or to use an LLC because it will create an additional layer of taxation that is called self-employment tax. Instead, you should use an S corporation, but only if you are a U.S. citizen or U.S. resident. That will be the first step in the journey of real estate. Once you have that covered, for example, you are a U.S. real estate investor, but you do flippings. You buy houses, you improve them, fix them, and you sell them. That is not, the IRS does not consider that as a long-term activity. So you should not use an LLC because that will be active business. You will have, if you use an LLC for that, you will get 15% additional taxation. So do not use an LLC for that. Use an S corporation if you are a U.S. citizen. If you are a foreign citizen, use a corporation. These are the things that the CPA knows and does for their clients, giving them guidance about the selection of the entity when they are starting the journey. Once you have including that the LLC, if you are using the LLC to invest in real estate, you have to have two people in the LLC. Otherwise, the courts and the IRS will not consider your LLC as a separate entity, and it will be disregarded. So, better to have that from the beginning. This is the starting of the journey. Once you have that covered, the next will be how you structure your or how you organize your expenses. What is the method that you use to organize your expenses and the income and provide at least a profit and loss in a quarterly basis? That will be the second step to make sure that all the deductions and all the reduction to the income kind of expenses are being taken, and you have a clear picture of your investment. At the same time, the LLC, or as a third step, the CPA will be able to provide you with a set of financial statement and also advice. As I said before, we have clients who called us in regards to depreciation, in regards to a 1031 exchange, in regards to long-term capital gains, and we advise to our clients regarding these specific topics when they call. So that will be the third step, the consulting side that only an expert in a CPA, expert in real estate, will be able to provide. And finally, it is the peace of mind that you have when there is a professional at your side that is covering all these bases, and at the end of the year, you get a home run because you have no worries and nothing to worry about the activity because the CPA is doing it for you.
Very clear. For a fifth question, we would like to ask, how can a CPA assist in risk management and regulatory compliance?
Okay. Regarding the risk management for real estate, is basically two things. One is the asset risk, the risk that not having an LLC will impact your network, your personal network. So if you follow the first step in your journey of real estate is to provide an LLC for your investment, that will be the first thing to, let's say, to commensurate risk, to reduce the risk that you have, the risk that if something happened in the property that you own, there is an accident or there is a person, let's say that there is a non-qualified contractor that is doing the roof or doing a repair, and he or she falls. As you are renting the place, the contractor will bring a lawsuit against the renter or the tenant and against you because you are the owner. So unless you have good insurance, I will always advise our clients to have, when the properties are their name, to have insurance, regular insurance, and also additional insurance that is called umbrella liability insurance. That is additional insurance to cover the portion that the homeowner's insurance is not going to cover. That's why I always advise with the client, because there is one of the things is when you buy a property at your name with a mortgage, you cannot transfer the property to an LLC. You cannot buy a property with a mortgage and put it into the LLC because the bank will not allow that. If you are not allowed to do that, then you have to have at least what is called Plan B to reduce the risk that your network, your assets are going to be compromised. The assets in addition to the house, because imagine the lawsuit is big, the person either lost an eye or the person lost a member of the body, and then bring a lawsuit. The house is not enough to, you sell the house, the insurance is not enough to cover the lawsuit. Then you're facing with your additional property to bring it, to sell it for satisfy the lawsuit. So what you can do there, you have to have additional insurance, what is called liability insurance. But the problem is there that providing that you have, or while you have a mortgage, you will not be able to have an LLC for the property because the bank will not allow. We've seen clients that, for example, they transfer the title of the property to the LLC, but even though they do that and they keep the mortgage under their name, in the contract of the mortgage, that could trigger the payment of the immediate payment of the mortgage. You have to be very careful. So when there is no way to put your property into an LLC because you have a mortgage, better to have enough insurance. And if you have one property, maybe it's not a big deal. But if you have multiple properties, then it's better to have a liability insurance, a good umbrella insurance that is going to cover. Therefore, you don't have any worries. So that is in terms of the reduction of the risk for the protection of your assets. That's the main thing, having your limited liability company. That's the reason that we advise having a limited liability company, provided that you're allowed and you are buying the property in cash or with private financing, that you're able to put the property into an LLC and the property is for rental. Do not put your property, your personal property, your house, and not put it in an LLC because then you will lose your homestead exemption. So this is only for rental. That will be one side, the protection of your assets with the LLC. And the second side will be the reduction, if you don't have an LLC, the reduction of the risk with additional insurance in the form of a liability insurance or umbrella policy. Those are the two ways that you are able to reduce the risk when you are dealing in real estate.
Great, understood. Now for our last question, I would like to ask, what is the added value of working with a CPA specialized in real estate investments?
The value is the ability or the accumulation of the experience that the CPA has gained with the other clients and bring that experience to the real estate investor. For example, we have a client with a large portfolio of properties that we conference with him or with them in a constantly basis, we talk to them. And they bring challenges for taxation and for the structuring of the real estate activity, like they would like to do, or they do what is called a cost analysis for the property. They want to know what will be the consequences of selling the property and having the depreciation recaptured, and as well what is the impact in terms of the capital gains. So all this, what if the properties, the company that hold the property sells a portion of the shares, but the property is still there. That kind of experience that is useful when you have these operations is what the CPA brings. That will be the basis. The consulting basis is that you don't have to go to Google, or you don't have to go to the consultant Google to find out your information. The information is on the tip of your fingers. You dial, call, or you text, we reply, and you have the answer that you need. That will be the basis of the benefit that the CPA provides. Check your returns at the end of the year. Mm-hmm. Many times we've seen that clients that they are first-time clients, they bring the financial statements or they bring their tax returns. We've seen many times that because they have not been with a qualified tax preparer here, unfortunately here in the U.S., non-CPAs or non-licensed accountants are able to file tax return and also provide for accounting. That doesn't happen in Europe or England or in Australia or even in India or South Africa. It's not like that. But here in the US, we have that ability. And the good thing is that prices are more affordable for accountants. The bad thing is because they don't have the knowledge and the experience and the qualifications, many times they screw the tax return for clients. And we have seen that tax return come, and then we discover that the depreciation has not been taken, or the depreciation has been taken incorrectly, or depreciation could have been accelerated and the client didn't receive that benefit. So it's not only about the consulting, but also the planning side, how the knowledge of that CPA will be able to be applied to your situation, to improve your situation, and to give you value to your investment. And at the end of the year, provide you with a sound tax return that you can take it to the bank for.
Great. Thank you very much, Fulton. We invite interested viewers to get in touch for more information and explore how our accounting services can benefit their real estate investments. Thank you for the clear information, and we appreciate you answering our 6 questions.
It's a pleasure, Rosie. Thank you.
Thank you. Un ratito